Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at a signal which nobody seems to have picked up, and that is the signal on the Bitcoin miners, which may well be telling us that there is a warning ahead and why there is a good probability that the inauguration today may well turn out to be a sell the news event. So we'll be examining this in detail. I'll also be having a look at a couple of other measurements to tell us when the end of the bull market may well be. And as per usual, I'll have a look at the wider markets as well as what's in the news and go through the 60-day cycle in detail to give us some idea, some clue as to the direction of the markets. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And I also want to make a friendly reminder that I don't make any predictions. I'm simply eliciting information from the charts and using them as guidelines from a probabilities point of view in terms of which direction the Bitcoin is most likely to go. I feel this is the best way to add value to viewers, so please take whatever value you can from my videos on that basis. I'm neither a perma bear or a perma bull. As I mentioned many times before, I always remain open, neutral and flexible so that when the charts are bullish, I take a bullish stance, and when the charts are bearish, I take a bearish stance. And that to me sounds a very logical way to stay on the right side of the charts. The idea is to give a constructive, balanced view, and then everybody can make up their own mind in their own unique way. Okay, I'm going to start off with the main theme of the video, and that is to look at some signals that may well be front-running Bitcoin and giving us a clue in terms of what is about to happen with Bitcoin. In the last video that I did a couple of weeks ago, I marked out this orange line here for the inauguration, and we mentioned that with the narrative that we'd built up over here, with the long-legged doji candle, which had the range of 104 at the top and 92,000 at the bottom, and how this Harry Potter candle casting its magic spell on subsequent candles and keeping them all within this range of 104 to 92,000. It waved the magic wand all over here, and so far, as per our narrative there, that this is more than likely going to have a run up into the inauguration. But the question now is, what happens here? So this rally has now sucked up a lot of investors. The question is, will we close above the 108,000 high that we've had so far? Or will this become a sell the news event? So if you watched my video 2 weeks ago, my higher probability play is that we will probably go into and test the 108,000. And the private members here on this channel will know that last Friday, as part of the narrative we've been building up, that narrative was saying that we could reach up to 110,000 as Bitcoin sucks up more FOMO victims before they turn around. And so far, as I'm doing this video, the highest it's reached is 109,356. And obviously the big question is, where is the probability here? So what we want to do is to paint the narrative now going forward from the inauguration today. And also please remember that the wider markets are closed today, so we don't know what's going to happen before the markets open tomorrow, whether this is going to become a sell the news event. But we can paint a picture, get some sort of an idea, and see what the narrative could possibly be. And before I go into the strong signal that's telling us that this may well be a sell the news event, we have this Harry Potter candle, and this was really a culmination of what had happened previously. So if we just go back a little bit, back here, we got this bear trap candle with a long wick at the bottom at 49,000. So what we've had is a run up from 49,000 all the way up to 108,000. That's a 118% move from the 5th of August here to the 17th of December. So within a 4-month period, we've had a 118% move. And as we know, nothing keeps going in a straight line. So we would have expected some sort of a consolidation here or quite a sharp correction in order to take the sentiment out of the market. And we were waiting for that sentiment when we were coming into the 60-day cycle here to take us down, maybe possibly even to as low as 73,000, but certainly around to the bottom levels of here, around about 84, 85. Now, because this didn't happen, and as mentioned at the time, that if this doesn't happen, the greater probability then is that we're going to be range bound between the 104 and the 92,000 in order to give us a time-based correction of sentiment. And this is what's been happening. The sentiment has been correcting, and now we've got this run up into this special event, the inauguration. What we now want to know is how that narrative is going to play out going forward from today. So this is the narrative I want to paint now in terms of how I see the picture developing. And it's very important to get the context of what had happened here. So what is the signal which has a good probability to play out and may well be front-running what's happening with Bitcoin? So I'm going to take you to one of the major Bitcoin miners, and that's CleanSpark. And last Friday, we had this gravestone doji candle, which normally comes at the top of a trend and usually into resistance. And what we know with Bitcoin and the Bitcoin miners is that they sometimes take turn in terms of front-running the other. So this is a signal that nobody seems to have picked up on, and that is that the Bitcoin miners may well be front-running what's going to happen with Bitcoin, because with the markets closed today, and if Bitcoin tops out anywhere between 108 and 110,000, then tomorrow this is what's going to happen with the Bitcoin miners and the wider markets. And it's not just CleanSpark that you've got this bearish candle. We have it on a number of other Bitcoin miners. We have it here on Cypher Mining. We have it here also on Riot Platforms. As you can see, we've come right into resistance here. And similarly here with Marathon Digital Holdings coming into resistance at the top of the trend. We've got a long wick at the top, making it a rejection of higher prices. So let's see how this plays out. But certainly this is giving us quite a strong clue that the inauguration today may well become a sell the news event. And if I had to put a percentages in terms of the probability, this would be a 60-40 event of a pullback from here. So let's see how that plays out. Obviously that's not a guarantee it's going to come back down, because 40% it could go this way. Because at the end of the day, I'm not privy to what the new administration will announce regarding cryptocurrency. If there is a very strong announcement with much greater than what we expect, then this will certainly move to the upside. But in the absence of that, this is more likely to be the case. And we'll have a look at the 60-day cycle in more detail a little bit later on in the program. And many people still asking the question whether this will be the end of the bull cycle. Our narrative at the moment still is that we should come to the end of the cycle towards the end of this year. And if I just use two more measures in order to reassure people of what the charts are saying, at the end of the day, it will play out whatever it will play out. But we can take solace from what the charts are telling us. Now, there are two simple measures that we can do in terms of the top of the markets and the bottom of the markets when Bitcoin came into existence. So those are, if we take the bottoms of each of the cycles, it will give us a good ballpark figure of where the current bull market will end. So obviously from time to time, we'll look at many different factors to give us some sort of a guidance as to when the bull market will come to an end. So I'm just going to use two other indicators here, which I have actually used from time to time over the last 4 years. So if we take the measure from the bottom of the cycle, which was over here, to the blow off top at the end of the cycle, which was in November 2013, we can see there was 37 bars. This is a monthly chart, so that's 37 months from the bottom to the top of the first 4-year cycle. And if we take the second cycle from the bottom here to the top, that's 35 months. So 37 months the first cycle, 35 the second cycle. And if we take the last cycle from 2018, the bottom there, to November 2021, we get another 35 months. So far in the last 3 cycles, we've had 37, 35 and 35. So on that basis, from the bottom at 15,400, which we got to in November 2022, 37 months would take us to December 2025. And as we've seen in the previous 3 cycles, we've topped out in November and December. So this is well within the realms of possibility and probability. But if we take 35 months, then that takes us to October 2025. So once again, the end of 2025 seems the most likely place where the top of the bull market will be currently. But if we take another different measure to see if there's any confluence of that, and that is by taking the tops of each of the cycles. So when we take the top of the first cycle to the top of the second cycle, that was 49 months, 49 bars. And previously, if we take it from the 2017 end to 2021 end, then that takes us to 47 bars. So 49 months from the first to the second, and 47 from the second to the third. So if we do those two measures, 47 will take us to October 2025 and 49 will take us to December 2025. So once again, we have a ballpark figure of the market topping out anywhere around October to December. And as we've used some other measures which have given us September as a likelihood, so keep that in mind, that September, October, November or December, the last 4 months of the year, based just on the charts, would be indicating that we come to the end of the bull market towards the latter part of 2025. And if we move on to what's going on in the news, and obviously the biggest news is that we're coming up to the inauguration today, and Bitcoin is hitting its all-time high of 109,000 ahead of that inauguration. And as we've seen, we're trying to find a narrative what's going to happen from today. And many people are targeting 180,000 as the likely target for this current cycle. And as we've done with many other measures over the last many months, that target can be really anywhere between 150,000 and all the way up to 500,000. And if we move on to the liquidation heat map of where the leverage players are in terms of their stop losses, this is also giving us quite a strong clue that at the 109,000, the price has already reached there, so it's taken out those stop losses, and the low point of that range is back to $100,000. So that's the range on the liquidity map, and we know how accurate this has been, that this has been weaving in and out and navigating itself from the top to the bottom in order to take out those stop losses. And just in the last few days, when we look at the ETF overview and look at the asset inflows and outflows, certainly over the last couple of weeks, this has been littered with red numbers, i.e. a lot of outflows. However, just in the last few days, as the price of Bitcoin has run up to the 109,000, you can see how this has contributed. This is the only significant outflow, but the others are very much 7,000, 1,000, another 2,000, etc. So you're getting a lot of green inflows here, meaning there is a lot of demand and a lot of people getting sucked up into the FOMO, into the inauguration. And when we look at the dollar, we'll see how irrational the markets are behaving currently. Now, we would normally expect that as the dollar is actually going up, the wider markets would be going down. But as we've seen with Bitcoin, it seems to be correlating what the dollar is doing. And as I've mentioned many times, this is sometimes what happens, and it catches a lot of people out. So when they see the dollar actually going up, they tend to sell into the other markets, but unfortunately they get caught out. And this is why it's very difficult to time the markets in terms of their troughs and the peaks. So what we saw on the weekly time frame here is that the dollar came up to this very strong resistance point, and you can see with this red candle here, which we pointed out at the time, we got a rejection one more time here. So the higher probability was to play back to the downside here. But of course, the dollar had other ideas, and it quickly turned around from there, going above the previous resistance point. And now what we've done is we've come back and retested it, where this resistance now becomes support. So now it has a decision to make. However, this particular candle may well be another bearish development here, because it usually forms part of the evening star pattern where you then get a big red candle down here on the right hand side. But as it's been defying all logic along this journey here, you can never tell with that. But the higher probability just from the chart development here is for the dollar to come back down. Okay, I'm going to move on to the SPX, and in the framework of the 60-day cycle, and please remember, many analysts out there use the SPX on a 30-day basis, i.e. the 30-day cycle. So you can use these as 30-day cycles, 60-day cycles, etc. It's basically just a framework in which to make head or tail in terms of what's happening with the price movements. So as we were getting into the midpoint here, we were expecting this to come back down into the midpoint before making a recovery. So obviously it made that recovery, but it seems to have got range bound with a fake out down here to the bottom side. And this is where a lot of people thought we've topped out, unfortunately for them. And currently, we're making a rise into that end of the 60-day cycle. However, the narrative is that if this inauguration becomes a sell the news event, then we're going to be running into that end of the cycle on a low as we would normally expect. Now, where that finishes, nobody really knows, but this would be a very strong point of finding support one more time before the start of the new cycle. So let's see where that gets to. But certainly, as we've seen, this is not a right translated cycle. So there is weakness now into the SPX, which is showing itself with a left translated cycle after making many right translated cycles previously. So this would be a healthy sign, and there isn't really any sign here that tells us that we've topped out. And if you look on the RSI, what we've really got is a bullish divergence here, where the price made a lower low and the RSI made a higher low. So on the basis of probability, this looks like it's going to, maybe with a short-term correction into the 60-day cycle, to move much higher in the coming weeks and months. And moving on to gold, what we've really got here, as we've been mentioning for many weeks and months now here, is that we're getting into this continuation pattern, and we were expecting a breakout to the upside here, and this is exactly what's happening at the moment. We got into this symmetrical triangle, making lower highs and higher lows here, and then somewhere along the line into this symmetrical triangle we had to have a decision to break to the upside or the downside. And the expectation with these types of patterns in classical charting is that with a higher probability we would be breaking to the upside. So this looks to me as though it's got quite a long way to go. And if you look at the RSI, we're not in overbought territory yet. This is on the daily time frame, and silver seems to be making the same type of moves, although it's a little bit delayed. So currently what we've got is that the symmetrical triangle, the price has actually gone straight to the end of it, and it now has a decision to make. And we know that silver generally follows gold, so therefore this is more of a trajectory for silver to follow. And when we look at the daily time frame, it's telling us that we've already had the breakout and we're coming back to find support on the previous resistance level. So we've already broken out, coming back to retest the old resistance as support before we move to the higher side. So once again giving us a very strong clue from the candles point of view of exactly where silver wants to go. And now coming back to looking at the 60-day cycle from the perspective of where we're heading in the coming weeks and months. As mentioned earlier, we've got into this inauguration candle. So a lot of excitement in the market, a lot of positive sentiment has built in from this candle here, which is the Dragonfly Doji candle. And in the private members section here with the Bitcoin miners, I was telling the members here when we had this Dragonfly Doji candle that it found support on this white line here. As you can see, it came right at that white line, and I'll show you that white line in a second. But certainly once you get a Dragonfly Doji candle at the bottom of a very strong trend, this is giving us a very strong clue, which I shared with the members over here, where I said that one thing that I wanted to bring to the attention of the members was the white line where Bitcoin bounced from in the chart. And it was none other than the RSI MTF line where Bitcoin hit at the top at 108,000, and I'll show you that in a second. And that 108,000 was obviously holding at that time, but we also now have hit the bottom of that indicator, which augurs well going forward. So with an understanding of candlestick patterns, once again they're a probability play. It doesn't always have to play to the upside when you have a Dragonfly Doji candle, but with about a 70% chance the price will go to the upside. So the mention here was that the potential close is that of a bullish hammer Dragonfly Doji candle, and that if we did close with the bullish hammer candle, then the probability will switch back to the upside. Remember, at the time the price was coming down, and then we had this Dragonfly Doji candle, so the probability shifted at that point back to the upside. But when you do see this candle at the bottom of a trend, always remember, just as a learning thing, that sometimes what you get is that the subsequent price does have a habit of running down some or all of the wick before making the move to the upside. So what we do get is an eventual outcome being positive from a probabilities point of view. So what you have is at the bottom of the trend, then you get this Dragonfly Doji candle, but to suck more people into a bear trap, the subsequent candles can be all the way down here, sometimes even protruding there, but then it comes back up and closes above the bottom of that candle. And that is a very sure sign, a higher probability play, that we're going to go back up to the upside. And these are the two lines of the RSI MTF line. The upper line I've designated as the yellow line, and the support line is the white line. As the price was rising, it came all the way up to the yellow line here of the RSI MTF at 108,000 and got rejected at that time, bringing it into line with the long-legged Doji candle here, which we're calling the Harry Potter candle. And with that Dragonfly Doji candle, you can see it found a rest and support right on the white line here. And I know many of you will be commenting and asking about the settings for this RSI MTF line. Let me show you those. These are the inputs and this is the style. And currently the yellow line at the top is all the way up here at 134,000. And usually what these turn out to be are bear traps. So this candle here was really a bear trap for those people who thought that this was going to go much to the lower side. But as soon as this ends up as a Dragonfly Doji candle, then you have to change the narrative back to the upside here. That is the only way to stay on the right side of the trade and on the right side of the cycles. So far what we've got with the 60-day cycle is that we began the cycle here on the 30th of December, and although we've made a lower low from that point, you can see quite clearly we haven't closed below that point. So this day 56, new cycle start still holds and is played out quite accurately so far. And currently on January 20th, Inauguration Day, we are on day 21, and this sets up nicely for a mid-cycle fall and then a run into the new cycle here. Now the biggest question here is, can we get above the 108,000? Obviously we're at 109,000 here. We haven't closed above that yet. But if this is going to become a sell the news event, then we could have a further fall, maybe down to this level here at around about 100,000, or a deeper correction would take us to these levels here around about the 95, 96. So let's see where this happens if we do indeed get that. But like I said, any announcement which is greater than what we are expecting from the new administration today or tomorrow, if the announcement is much more bullish than we expect, then this would have that effect here to make the price go much, much higher. So that's the 40% play, but the higher probability play, like I said, in the absence of a bullish announcement, then this is what I would expect in the coming days and weeks. And we're waiting for the end of this current cycle around about the 28th of February. And as I mentioned, that with a big move from 49,000 to the 108,000 here, now the 109,000, a big move like that in a short period of time would suggest that there is a high probability for a bigger consolidation in order to take the sentiment out of the picture, reset all the indicators, and then to go again in the next cycle. So this is where the cycle finishes. So the charts would be telling me that more than likely it'll be the next cycle before we properly break this 108, 109,000 and the continuation of the final phase of the current bull market. So in terms of strategy, then everybody has to make up their own mind. For those of you who've been watching my videos will know that our strategy here at Wisdom Bites has been to try and get in here, which we did back at the end of 2022. And what we wanted to do was to capture the whole of this move here. And so far, that narrative seems to have played out quite well up to this point here. And we just have a little bit more to go, so there's nothing to change my stance in terms of my strategy. So people will always be asking that if you're expecting a sell the news event, why wouldn't you take profits? And my narrative is that if you're going to capture the whole of this move from the bottom of the market to the top of the market, please remember you'll never get the exact top. For those people who want to exit, and I know that many people don't want to exit, they want to continue for the next 5, 10, 15 years, and that's absolutely fine. Everybody has their own decision and their own strategy, which is unique and individual to you, and nobody can disrespect that. But I can only share with you what my thinking is. My view is to get out as near the top as possible, accept what the market gives me, and then wait for the pullback, which may or may not come. Nobody can guarantee that. But that's my narrative, and then try and get back on board like I did here at the bottom of the previous bear market, and get back here again one more time. The only reason I would be wanting to get out here currently with the narrative of the sell the news event is that if I felt overexposed to the market and I wanted to take something off the table in order to take the anxiety of overstretching myself. But in the absence of that, it's very important for me anyway to stay in my positions as part of my strategy to capture the whole of this market. Whether it goes up and down in between, it really doesn't matter to me. But if it matters to you, then you have a decision to make. And for those of you who are taking an interest in our trading portfolio that we have here in the private section of this channel, we started this portfolio back on the 6th of January 2023 with $100,000, and the current position as of the close of play on Friday last week is 556,299, which is 556% up from the 6th of January. But in 2024, we had quite a bad year, and we should always be very straight and honest about how these things work, because the miners are a high volatility play. In 2023, we outperformed Bitcoin, but in 2024, as we've seen with Bitcoin, it's outperformed the Bitcoin miners by quite a bit. But over the whole period from the end of the bear market to the current situation, the portfolio is up 556%, while Bitcoin is up by about 700%. So currently, in the last 2 years, since the end of the bear market, Bitcoin has outperformed the Bitcoin miners. And the question is, what will happen in 2025? All I would say is that for those people who are interested in the Bitcoin miners, it always comes with a big warning that the Bitcoin miners are a high volatility play. They can go up by 2, 3, 4 times higher than Bitcoin, but they can also go down by 50, 60 and 70% when Bitcoin goes down by 15, 20%. So there is a leverage play either side. And what we're really expecting in 2025 is for that leverage play to play out what it did in the last cycle, which I can just show you. And as I've said many times before, it's all about probabilities. There's no guarantee it's going to play out. If we take Marathon Digital Holdings as an example, after the halving, the red dotted line here, we can see that to the top of the previous cycle, in the final phase of the bull market, which was really over here. So I'm not going to take it from the bottom here. If I just take it from the end of 2020, around here, this was around about a 54x. Obviously, nobody can guarantee that. I'm just giving you an example based on what's happened historically. So while Marathon, as a Bitcoin miner, went up by 54x from around September 2020, Bitcoin from September 2020 went up to the 69,000 by 5.9x. So the Bitcoin miners had a leverage of 10x on Bitcoin back in the last cycle. And the question people always ask is, why is there such a leverage play? And it really has a lot to do with the number of Bitcoins that the Bitcoin miners are holding. So if we look at Marathon Digital Holdings as an example, they're currently holding 44,893 Bitcoins. About half of them they've just bought recently in a similar manner to what MicroStrategy has done. And as we've seen with MicroStrategy, that's run up much, much faster than even Bitcoin. But most of the other half of Marathon's total Bitcoin holding was actually mined at a much lower price to what the current price is. So while the current price is at 109,000, their current cost of mining each Bitcoin is at 46,000. So every time Bitcoin goes up, there is a multiplier effect of the number of Bitcoins it's mining on a monthly basis. And last month it mined 890, and the month before that 907. And all of these are going into their holding position here. So as Bitcoin goes up and up, and they're mining these at this price here, so you can see quite clearly there is a multiplier effect, and this is where and how the leverage plays into the Bitcoin miners. So when you consider that Marathon and the average cost of producing Bitcoins at 46,000, and there's others like CleanSpark which are much more efficient, producing them at about 28, 30,000, you can see how the logic dictates that the Bitcoin miners will do very, very well as Bitcoin keeps going up. While that didn't play out in 24, it did play out in 23, and it did play out in the last cycle in 2020-21. So that's the narrative that's being painted with the Bitcoin miners. Nobody has a crystal ball. I can't guarantee that they're going to do that. But when you analyze the actual details of how these work, we should be expecting a big move for the Bitcoin miners in 2025, as long as Bitcoin goes up as we expect. And this is the reality of what's happened with the Bitcoin miners. So in 2023, from the bottom of the bear market here, you can see quite clearly that at the end of 2023, with this candle in December 2023, the Bitcoin miners went up by 9x, some by 10x, some by 12, 13, and 14x. And Bitcoin was nowhere near there. But if you look at 2024, this is a consolidation pattern. So you would expect with a consolidation, this is a continuation to the upside. So this is what we're expecting, that after a very strong consolidation for the Bitcoin miners, their breakout should be in 2025. So let's see how that plays out. But if you want to join us, now if this is of interest to you, now you don't have to invest into the miners, but if you're just interested in the miners and want to follow the channel with 2 videos on a Wednesday and a Friday, and then market update every single day of the week, Monday to Friday. At the end of each trading day, we do the market update to keep us abreast of what's happening with both Bitcoin and the Bitcoin miners. And if that's of interest to you, then you can join us. That below any one of my videos, there's a join button here, as well as in the description box, you'll find another red button here. And there's a new members introduction video which goes into the ratio trading that we do as part of our trading portfolio. And many people ask us about what these ratio trades are. These are the ratio trades that we started on our trading portfolio back in January 2024. And these are all our results. These are the ratios that we got in and out. These are the profit and losses. The blue numbers are all the profits, and the red numbers are the losses. We're currently in 2 trades at the moment. We've moved from MicroStrategy into Riot, and we've moved from CleanSpark into Marathon. And as you can see, we've done quite a number of these trades in the past with very good results. And so far, our success rate with the trading portfolio is running into over 90%. Okay, so I'm going to leave it there. I hope you found value in the video. And if you did, please do remember to like and to subscribe if you haven't already done so. And if you got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.